Hello and welcome from a slightly less locked down London than a week or two ago. You're watching For Finance. I'm Charlie Gibson, and it can't have escaped your notice that the world has very definitely changed around us in the last couple of months. And that has been good for some companies and less good for other companies. It won't surprise you to know that a company that is dedicated to improving the lives of many around the world by developing and commercializing market-leading antimicrobial technologies and products will be one of the winners. And against a background where markets are down, 20-25%, depending on your currency, this particular company has gone up fourfold. The company I'm talking about is called Byotrol. It is listed and traded here in London, and its shares you could book for about £0.015 in January. They're now trading at £6. And joining me now is the company's Chief Executive Officer, David Traynor. David, very good morning to you. Thank you very much indeed for joining us.
Thank you.
So, David, tell us, hand sanitizers, sanitizers of any description. I know you're in the closed period at the moment because your year-end results are to 31st of March. But just tell us what you can about trading conditions at the moment.
Yeah, so we have actually told the market how we got on for the last year. So we've told the market revenue was £6 million and EBITDA is about 250 grand, and that's obviously subject to audit. And the audit process is quite complex now when you can't have auditors on site, but we're working hard to get those numbers out as soon as we can. We also told the market that we did £1 million worth of sales in March and £1 million in April, and May is looking pretty good as well. So you put those numbers together, you can see that this financial year is going to be some way ahead of the previous financial year.
I mean, I guess that, more interesting than your 2020 financial year is going to be your 2021 financial year, especially if you see a continuation of those sort of run rates. What can you, given that, the world started locking down in late March, and I assume that's roughly the sort of period that that your sales started, if you like, to take off, because that, roughly speaking, is the doubling in the run rate, isn't it? Because if you look at FY19, you were about 6 million. I'm talking round numbers sales. That would be £500,000 a month. You're now selling at about £1 million a month. What can you tell us about the 2021 financial year?
Well, we're going to put out guidance at some stage, and it will be probably around the time of our results, maybe a bit earlier, but probably the time of results. As directors of the business, we have to be very confident the numbers that we put guidance out are correct, both on the upside and the downside as well. And things are moving about so much, it's actually very difficult to stick a pin on the particular number that we can support. So we're going to let it run for a month or so more, so we can be more certain when we do actually put out those numbers. But again, £1 million March, £1 million April, £1 million May, I'm hoping the run rate is significantly higher for product sale, but also we're doing licenses and technological development agreements as well that will add to that as well. So we are feeling already pretty good about our numbers for this new financial year. The question is, how long is it going to endure? I think it will endure for quite some time, but at what level will it endure, and what is the new world going to look like? And I would say in a couple of months' time, probably have a better view on that.
David, we've talked a bit about the products there. You also mentioned that there's this issue of licensing. Just tell us a little bit about the split in terms of your business between revenues derived from licenses and the products themselves.
Yeah, we are 1 in 4 people in the business are scientists based out of labs in Chester. So we are an avowedly scientific-based company. And we did that because the regulatory regime for these sorts of chemistries now is actually quite stiff, and you need to be at the high ground of science and ethics if you're going to be successful in the long term. So we take that science and we put it into selling products ourselves, direct to businesses and consumers, but also via third parties. And we can scale that business to a point, and we can certainly benefit from the propitious market environment that we have right now. But another way of scaling is by setting up longer-term licensing and technical deals with third parties who can get us into markets we can do on our own in an efficient way. So I like licensing because once you've done the work to actually pull the license in, most of the work of manufacturing, all that sort of stuff, is done by your licensee. And what we have to do is concentrate on keeping the intellectual property and the claims in very good shape. So, but it's very difficult to make huge amounts of money out of licensing very quickly. So I think you need a blend of the two. I think that if we're doing between 10 and 20% licensing-based income a year, that's quite a nice place to be. because I'd quite like for the business to have product sales that are more than covering the costs. So then baseline, you can project out profitability from pretty simple standard product sale, and then every now and then licensing is going to add to it, and you gradually step change your way up, because the licensing also adds to your technological suite. So 10-15% licensing feels about right.
Tell us a little bit about your products. You think I think of sanitizers from a simplistic perspective. Bit of alcohol, bit of carbomer to increase its viscosity and make it feel about right. Whack it in the bottle, sell it on. But I think yours are probably a bit more sophisticated than that.
Yes, well, I think they are. I mean, I think so. We look for products that are in this triangle of regulatory approved, and that's really key to our marketplace right now, that have some degree of uniqueness about them, but are also valuable. And so we tend to look for niche markets. So one market that we saw a few years ago was that 15 to 20% of people have skin sensitivity towards alcohol-based product. So, dries the skin, it can increase infection, and so on. So all sorts of reasons why, and some people have morality and ethical reasons against it as well. So we produced a formulation that works as well as an alcohol-based hand sanitizer, that works to the level of the NHS, and we are supplying products into the NHS via C. Johnson, but doesn't have the disbenefits of alcohol attached to it. And if you agree with the 15-20% alcohol intolerant on skin, that's quite a big market segment to go for. The difficulty, though, is getting the performance characteristics without the use of alcohol, and that's what we've managed to do. So that is one good example. Our surface sanitizers, some of them don't contain any biocides called quats. You can't use quats in food environments because it builds up in the food chain, and that's another difficult thing to do. We have some sanitizers that you spray or wipe it onto a surface, they carry on working when they're dry. So most disinfectants that you see, if you sanitize the surface, and then 10 minutes later someone comes along with a flu bug on their hand, a bit of moisture, sticks their hand on the table, takes it off, that flu bug will grow. The next person comes along, touches it, puts it to their mouth, there's a good chance they're going to get infected by it. Our stuff, some of our products work slightly differently in that when it's dried, it leaves a nanoscopic layer on the surface. You can't see it, smell it, touch it, has no impact on you, can't taste it, but it will kill the bug when it lands on the surface via that route, which means you then have, in business terms, cost-benefit claims. Use our stuff and you won't get listeria outbreaks in your factory. Use our stuff in your healthcare environment, you get lower infection rates for less chemical use overall. Some nice cost-benefit claims. And in consumer terms, you get long-lasting protection for you and your family, long-lasting protection against odours. Lots and lots of very resonating claims. So the trick is to come up with the claims and the cost benefits that work within the regulatory regime, but also going to get the margins that you need, and we're quite good at it.
So you mentioned there, I think, did I understand you correctly, that the products that you development and for which you sell license, they already have regulatory approval? Is that right, or is that something that you have to seek?
The US is the regulation is already set in stone. So you know what claims you can make, what you can't, and you know what tests you have to pass to make claims. The European Union is going through a bit of a process right now. So the first thing they're doing is they're looking at all the active ingredients that are allowable to be used as biocides in Europe, and they're banning quite a few, right? And once the individual ingredients have been approved, then you go through a process of having the individual products that contain those ingredients, often in combination together. They have to then approve that, and that's a lengthy process. And bit by bit, they're working their way through it. And I think we're probably 2 to 3 years off completion of that. But what that's doing is it's removing some of the weaker competitors, so people whose product doesn't meet the claims they're trying to make. It is causing expense of being in this industry to go through the roof, because you have to go through the testing and then the regulatory listing process. But once you're there with chemistries that are approved, the barriers to entry are substantial. And what we're doing is we're taking that almost like chemical real estate that we have, and we're licensing that out to people who have better distribution with us, or better access to niche markets, or better marketing spend, or whatever, where they can use the chemistry that we will support from a regulatory perspective. And what we do is we pay for the regulatory work through the licensing income and all sorts of other things that we do, and make a big margin at the end.
So if I understand it, then that 2 streams, if you like, here, or at least 2 streams. Now, when you talked about your chemistry sort of portfolio, your chemistry real estate. So that is products, molecules that you have already developed, and now it's a case of commercializing. Is that right?
Yes, and we've been commercialising bit by bit for a while. So it tends to be formulations. It's formulations. So it's combinations of acceptable biocides that work in an unusual but valuable way in big markets. And so when you put two different active ingredients together, chemistry takes place. So not only do you need to be convinced about the individual actives, you need to be convinced that actually they're working well together, and there are no problems coming out of it. So we're really good at understanding the active ingredients and putting them together in ways that meet certain benefits. And what we do is then license those out, or we sell them in products to directly ourselves in some markets.
So what sort of timeline are we looking at? If you have one of these formulations in your real estate at the moment, how long does it take to take it from your real estate, your chemistry real estate portfolio, and get it into the marketplace?
We've been doing it for a while. So we've been selling the hand sanitizers we've been selling for quite some time. I would say that was probably about a year and a half's worth of work for us to get to the point where we're happy with it and distribute it. We sell some directly, and we started doing licenses in that in the last couple of years. We also, if you go to Boots Chemists and buy their own brand hand sanitizer, that's our product as well. So we do some white labeling also. The surface sanitizers, well, it depends on the claims that you're going for. Some things are very, very difficult and take a few years. Some things are relatively easy to do in 6 months. Some things are already in the market. We found a new claim for it. We just need to test it out and make sure that regulators will accept it.
So if you compare that to a new formulation, if you suddenly have an idea, I think that I could mix A with B and then stir it together with C, and that would make a great product. How long does it take to get from that thought through to full commercial reality?
Anywhere between 6 months and a year and a half.
Okay, so
so for instance, the very simple. If I have a formulation I know is going to be acceptable to regulators, I just need to test it for a new claim. The testing will be done over the course of a few weeks, but then you need to do stability. And stability takes 3 months at least. So 3 months is about the shortest you can possibly do it.
I noticed that if you look at some hand sanitizers, and the sort of type you buy at corner stores, but quite often they're inflammable and they have a big warning saying, don't put this anywhere near fire. Does that pose a problem for you, either in terms of approvals or in terms of the manufacturing?
Well, we don't make alcohol-based hand sanitizers. That's other people's market, and they're quite easy to make, as you said. When we first started talking, the things that we make are quite complex chemically. And actually, I quite like the fact that there are those risks with alcohol because ours don't have those risks. So, for instance, when we were selling directly to ourselves to the NHS, we were used a lot in mental health institutions, because there were instances of people drinking the stuff straight from the dispenser, and so immediately we had benefits compared to that. So we are very well aware of the issues with alcohol-based hand sanitizers. And we are cautiously putting our own product alongside the alcohol-based hand sanitizer. But the difficulty we have, I guess, is that when you put alcohol-based hand sanitizer in your hand, it evaporates. You feel this nice sort of feeling in your skin. People sort of associate that mentally with it working. Actually, it's just evaporating, and it's disappearing almost so fast you don't get much use on the skin. Our product is a lot wetter, and so one of the things we have to deal with is to persuade people that actually wet is fine, and you keep rubbing it in, it's going to feel very nice afterwards, and it does, but it's a change in behaviour. Those are the sorts of things we have to battle with more than actual safety issues.
So if we could talk a little bit about your financials. If I was to go back to the last financial year to March 19, I noticed your gross margin was about 50%, there or thereabouts. Is that sustainable, do you think?
We don't manufacture anything ourselves. It's all outsourced. So obviously at the moment we're paying a margin to the contract manufacturers that depresses those margins a bit. On our products, it's anywhere between 20 and 50% generally. But the gross margin is boosted, of course, by technical development deals and licenses, which are 100% gross margin. So the blended margin, about 50%, feels about right for us.
So, but if you then look at the pre-tax margin, the pre-tax margin was a lot lower because there were administrative costs, there were R&D costs, as you would expect. But anyway, it was a lot lower. How do those costs react when sales go up? Is there a geared effect, or do those costs stay approximately flat? somewhere in between?
I think the costs should stay broadly flat. The one area where I think we probably need to spend a bit more is in marketing. I mean, we've been really quiet for the last few years. We've been developing our chemistries, and so I think we need to make a lot more noise than we are, particularly in current time, than we have been historically, particularly during current times. But I don't see a need to increase the costs of the business, particularly from where they are now. And not unless some massive new opportunity comes along where the risk reward makes sense.
Speaking of massive new opportunities, I'm right in thinking you made an acquisition of Medimark relatively recently. Just tell us how that's bedded down.
Very well. So we for a long time. So when I took over the business in 2013, we concentrated on getting our technology up to speed. We were about 18 people during that time period for several years, of which at the time 6 were lab-based people. So we were a tiny team running a listed business, selling products mostly under license, some to customers. We realised, though, that we were short on sales oomph and marketing oomph. And Medimark, who are a company we've known for a while, very active in the human and animal health business, were very long on sales and marketing, but a bit short on technical. So the two things coming together sort of made absolute sense. We bought them about a year and a half ago, maybe a bit over, and in earn-out, and they were working their way through an earn-out based on EBITDA multiples. And we accelerated that earn-out in February this year. And the plan was, of course, to integrate the two companies together very quickly, because there are definite synergies at all levels. There's some cost synergy, but mostly cross-selling synergy across the company. The issue, of course, was then that lockdown happened. And in all my textbooks on mergers and acquisitions and experience, no one taught me how to do an integration when I can't actually leave the house. So I think, but having said that, we use all the various social media things and Zoom, and it's working out quite well. And they are definitely a very important new voice in the business. And I see substantial upside from the acquisition. I'm really pleased how it's going.
We've talked a bit about, where your sales come from in terms of your product lines. What about in the aftermath of the Medimark acquisition? What about geographically, the sort of the split, I suppose, particularly between Europe and the US, but also the rest of the world? What does it look like?
We are mostly UK right now, a little bit in the States, 10-15% in continental Europe, and maybe 5-10% in Asia. Once you own this, go back to this real estate phrase, once you own that, you have to figure out how best to exploit it, and geographic expansion is one of those things. When I look at TriStel, fantastic company, basically they have lots of technical resource, but actually it's a relatively simple business in terms of the formulation that they use, and they're doing incredibly well, taking that really good technology around the world. And I think that we have potential to do that. I mean, I've got too many opportunities right now. The truth is, how do we focus in a way that's not going to blow costs too high, but is going to make us a really good return in a sort of a calm, cautious way, even in the light of the current market situation that we're facing?
If we were to, we've talked a little bit about the financials and the sort of top line and then down to the pre-tax level. If I was to go down to the earnings per share level for last year, for FY19, I think 0.08 pence per share in earnings, 6p share price. That's the sort of P ratio that analysts would, under normal circumstances, probably describe as demanding. I don't know. It's fine as long as you can give them the growth to justify that share price. Can you?
Well, look around you. I mean, the whole world has changed, and we're right at the epicenter of doing financially well from it. What I'd say is that the multiples in our sector are very high right now because of this structural change going on, in my view. But then you put on top of that the market environment, then I can see where valuations are going to carry on growing. But the truth is, I spend more time focusing on just making the business better, more valuable over time, and the share price will look after itself. But we are growing very fast.
All right, David, thank you very much indeed. We wish you the very best of luck. That was David Traynor, the Chief Executive of Byotrol. Market cap, about £26 million at the moment, but big ambitions. As I say, the share price has moved from 1.5p in January to about 6p now. and I think you might agree with me, in the right place at the right time. I'm afraid that's all we've got time for today on Core TV. This is me, Charlie Gibson, signing off, but we'll hopefully be bringing you some other investment opportunities of a very similar nature in the not too distant future. Until then, you have a very capital day.